Have you ever wondered why some stocks explode out of nowhere? This is a video from my mentorship with my mentor where he breaks down exactly what happens. And it often comes down to two things: high CTB or cost to borrow and low float. These two factors can create serious pressure. And when they align, the move can be fast and aggressive. By the end of this video, you'll know exactly what CTB means, you'll know exactly what low float means, and why this setup can lead to major breakouts. Let's get right into it.
What is cost to borrow? You often heard me talking about cost to borrow, right? But do you have an idea, bro? What is cost to borrow actually?
I don't.
Okay. You know I short a lot, correct?
Correct.
What is short? Explain to me.
Expecting the stock to go down.
Same perception as buying a put. But there's a major difference here. When you do options, when you buy a put, what do? You actually bought that contract, right? You own it.
Correct.
Here, what you're doing is you don't have the stock. You are borrowing it from your broker. Okay? In the same manner, you go to your bank today. You ask for a $5,000 loan. I'm pretty sure your bank will approve it for you right now. Correct?
Correct.
Without a date, without a delay. Given your credit history, given your history with the bank, everything, correct?
Correct.
Probably you can get a $50,000 loan as well without much hassle.
Exactly.
Okay. You want to go and borrow $500,000. Do you think your bank is going to give it to you? Be honest with me.
No.
Why?
The risk is too much of a risk. I would need to.
The person.
Exactly.
Okay. Do you have a mortgage?
I don't live in an apartment.
Okay. Do you have a loan on your car?
I do.
Okay. How many credit cards do you hold?
3.
All paid off or all have substantial balances?
Very low balances.
Okay. So basically probably you have probably a good credit history if that's your case.
Exactly, but not for $500,000.
Yeah. For 50,000 you're good, maybe 100K you can manage, right?
Exactly.
But not beyond. Okay. Now, very similar to that, your broker also knows your trading history, correct? And the amount of bonds that you have. Now, if you basically had a house, you could use the house as a collateral and the bank would be more than happy to give you some more money, correct?
Correct.
Okay. If you put up your car as a collateral, the bank would be happy to give you some more money, correct? Once you paid off that car?
Exactly.
Yeah. So given like the size of your portfolio with your broker and everything, your broker basically knows your history. So typically on a shorting, a margin account all brokers require because they are giving you credit. Okay. It's like your current account has an overdraft, right? Same concept here, my brother. Okay. You are taking a credit here. Okay. You are taking a credit with the expectation that you will be returning those. Instead of money, you are borrowing shares. So let's say on AIFF, I plan to short this. What I would have done, I would have gone to my broker, told them, hey, can you give me 500 shares of AIFF? My broker would have given me 500 shares if my credit history with them is good. And the broker knows that I have enough money in my account that if things go south, I can basically be held liable for it. Okay.
Exactly.
I took it. I'm seeing AIFF basically is facing a struggle around that $16 place. I sell it to you at $16. My perception is the price will gradually come down. When it hits 15-ish, I will basically buy it back from the market, return it to my broker. Correct?
Correct.
The $1 that is the difference, that is my profit, minus whatever commissions. All right? But very similarly, just as your bank does not give you free credit, Your broker also will not give you free credit, bro. If your broker is lending you the shares, your broker most likely expects something in return. That's the interest, right? Your bank doesn't give you free money.
Yeah, that's fair. Or that's business.
Yep. We are the biggest crooks in the world. You will see, whatever happens, economy goes up, bro, economy goes down, big banks always make profit. Okay. Big banks don't make profit basically when they steal. Other than that, big banks always make a profit. Okay. Honestly, we are the worst white collar criminals you will ever see, bro.
Oh,
Okay. Coming back here, your broker gave you that, then they charge you interest. Okay, that interest is called CTB or cost to borrow.
okay.
This is very important whenever you are basically dealing in penny stocks. Okay, your CTB, my friend, is the cost that costs you to borrow this. CTB is calculated as a percentage in interest percent, and it is calculated annually on an overnight basis. What does that mean? I borrowed 500 shares of AIFF from my broker. Now, to allow me to borrow that, let's say AIFF closed at 1546. What any broker does is they will round it up to the next highest number. So, 16 into 500 shares, that's $8,000, correct?
Correct.
The interest rate on this thing is somewhere like 470%.
Wow.
Yeah, it is. So if I am holding this thing for a whole year, it is going to cost me 37,600. It's a lot of money, correct?
Correct.
Next comes, usually nobody holds it for that long. So the cost to borrow or the interest is calculated on an overnight basis. Banks never calculate it as 365 days for a year. Banks always calculate a year as 360 days. We did it. So what does it tell you, my brother? Every single night I'm holding my position, it is costing me just $104 just for interest. That's a
Wow.
lot, correct?
Yes.
Pay $100 for just $8,000 position just as an interest. To make profit, I not only have to sell at a much lower cost, but I also have to cover this $104. Make sense, Jeremy?
It makes sense.
Okay. Now, if this thing keeps on going up, I'll be panicked, right? If the price went to
Yes.
$20, my interest cost just went through the roof even more. Do you realize that?
It does. Yeah. The cost of it.
Yep, the cost to borrow it and hold it, correct? Naturally,
Correct.
what do I want to do then, my brother? I will go back to the market and I will buy that share back from the market to minimize my loss, correct?
Correct.
Because it can go back to 25. I'm even more screwed. Am I not?
Yeah.
Do I want to get screwed?
No.
All right. Very similarly, when price is going up, what will happen, Jeremy? Some people who were traditional long traders, who basically see when price goes up, they jump on it, correct?
Correct. Fear of missing out.
Yep, you have exponential demand now, my friend. Usually there is only one type of trader who buys. Now you have two different type of traders, two very different type of traders. Both have the only same objective. We need to buy. One buys to minimize loss, one buys to get into the wagon. Make sense?
It makes sense.
What happens when your demand increases twofold? Price shoots through the sky, correct?
Correct.
This is your short squeeze.
Mm.
Because your demand has just gone up exponentially. Me, the short trader, wants to buy. Jeremy, the long trader, wants to buy. Everybody just wants to buy, right?
Correct.
Okay, usually I will try to bring it down and you will try to bring it up. There is a tug of war. But now, both of us are using all our strength to pull this up. So what's the expected result?
It shoots up.
It shoots up. Exactly, that's what's happening here. Makes sense, bro?
It
Now,
does.
when you trade a penny stock, you gotta keep this thing in mind, alright? If you wanna take a long position, always look for penny stocks and this thing has a smaller float. What's the difference between a small float and a large float?
I'm not sure.
And that's where I have grown now. Just looking back at this video now, it's almost like common sense to me. It's high CTB, low float. Penny stocks, you receive a scanner alert, and automatically what I'm looking for is relative volume. Also, seeing if it has a low float, high CTB, I will pull that stock up on the trading view, check out the charts, see if it's near the EMAs, and decide an entry point off of that, decide my stop loss. But for penny stocks, again, like my mentors will say here, but for high CTB, low float, that's what you want to look for. And I will have a Discord group I'll create and have a scanner that will have those different alerts where you can see different stocks that has those different low floats, high CTB. But if you obviously can look up a different stock, you want to just search and see what's the float and also if it's high CTB. But let's see what else he has to say.
Thank you for the honest answer. Okay, one thing I like about you, you're very honest. Okay. Bro, back to my turkey. It's Thanksgiving time. Every freaking store has a huge stock of turkey. What do you think will happen to the price of that turkey?
It'll go down.
Why? Or it will not go up, right?
The
Because
supply demand.
there's a huge supply. Okay.
Yeah, exactly.
If a share has a huge float, that means there is a large quantity of shares available to trade. Versus, if a share has a very small float, okay, what does that tell us? That tells us there are not too many turkeys left on the shelves to buy. Now you, my brother, wanna put that turkey, bring it to your home, wanna put it for your children up, correct?
Correct.
Once a year, you don't give a damn if the price of turkey, normally which is $3 a pound, right now has shot up to like $10 a pound. You're gonna buy your turkey, correct?
Correct.
If required, if I'm in front of the line in front of you, you will literally shove me out and get your turkey. You need to take your turkey home today.
That's
Correct?
correct. Correct.
Because the demand is there. The smaller the float, just imagine now what I told you, a high CTB with a small float. More people chasing lesser number of shares. What do you think is gonna happen, Jeremy?
More demand.
And more demand creates,
Higher price or increasing price.
there you go. Can I go to bed now? Okay, plain and simple. When you trade a penny stock, bro, your objective is to try to pick a stock which has a small float and a high CTB. Because the moment that thing starts running, both your long traders want to jump in and your short traders want to get out by buying back. So that has a higher chance of a run-up. Make sense?
It does.
Versus something there is a huge quantity available, dirt cheap to borrow. What do? If it goes higher, I don't care. I can hold it for a long time. Instead of like 470% on this thing, if the cost to borrow on this thing was, let's say, 1%, all right? Divided by 360. So every night I hold, this costs me 22 cents. Do you think I would mind holding it for 1 year for the price to come down to $10?
Yeah. But you wouldn't mind.
I don't mind. I don't give a damn, right?
Exactly. Pennies on a dollar.
Exactly. And when it's $104 just to hold for one night, I'm sweating, bro. I'm literally sweating now. Makes sense.
9-day difference. It makes sense.
Okay, this is the very basic criteria I use when I select what I want to trade, whether to go short or to go long. If the CTB
just-
is low, I will I will short it. CTB low, high float, I will short very confidently.
Oh, wow.
Because you got the logic, right? I just explained to you.
And just based on that alone, that's how you pick and shorten or go along.
That's the first condition that I base my decision on, right? Which side I want to
Okay.
go. Okay. If I see like there is one more part to it, if I see there is a news, but the news is not substantial, it's just a so-so news, kill it. All right. Go short. Makes sense.
Okay. It does.
If the news is a substantial news, yeah, I would be very careful then.
Okay.
Okay. Now, the components are high CTB, low float, a good news. That's an ideal candidate for going long.
Okay.
Make sense?
It does.
If you want to take notes, start. Okay. High CTB, low float, and a good news. Good news is the catalyst that it needed to run. The low float means like lesser shares to trade. And the high CTB means the moment it starts running, the short sellers are panicked and the long buyers will jump in more. More money chasing less things. Price goes up, correct?
Correct.
That's it. Vice versa.
So hope you guys were able to get some value from that. I wanted to keep or pick a part of the mentorship series. I have about 10 hours of content with my mentor that I'll try to pick out some really good pieces, but also at the beginning of these videos, I want to pick out some things that are pretty simple and things that you can really nuggets you can really just take action with. So when looking at a penny stock, like he mentioned, high CTB, low float, and also you can check the news. I think maybe getting into the EMAs right now for a beginner may be too technical. Looking at RSI, looking at MACD, that's all confluence and all other indicators that you can use to also confirm which way the stock may go. And again, these are all just probabilities. So when we're investing, when we looking in the stock market, nothing is a guarantee, but we want to look at a lot of different indicators and say, hey, based on these different indicators, there's a great chance, there's a high probability this was more than likely what will happen. So and based on that, what I see, based on the high CTB, the low float, the news that this company just got a new grant for $100 million. So based on all these different things, there's a good chance that this stock may increase. So I want to go in and put in the entry point and then put in a profit target. And also, hey, even though based on all those different great indicators, we still want to have our risk in mind. So knowing, hey, even with all this information, let's say, hey, if the stock was to get down to this point, or hey, I want to put in a stop loss in case the stock was to go down, that I'll be triggered and it'll take me out so I don't lose too much of my money. So, but again, I just hope this was somewhat valuable. I thought just keeping it pretty simple and sweet, and you guys can get some value for that. So until the next one, see you guys.